Hi, it's Jeffrey Cohen, Chicago Quantum, U.S. Advanced Computing Infrastructures, Inc. We're an Illinois registered investment advisor. This video is to tell you about the top 25 profitable companies. And the list surprised us. It'll probably surprise you too. So the number one stock is Apple. Apple's just missing from our run, but it is a tremendous producer of cash and profit. Then you have Microsoft, then Apple, then ExxonMobil, JP Morgan Chase, Chevron, Pfizer, Meta, which is Facebook, Bank of America, AT&T, United Healthcare, Verizon, Johnson & Johnson, ConocoPhillips, Wells Fargo, Home Depot, Citigroup, which you should be nervous about, Merck, Visa, Procter & Gamble, Goldman Sachs, Marathon Petroleum, AppV. Others, kind of runners-up, Intel, Qualcomm, Occidental Peat, Morgan Stanley, Moderna, Amazon. So let's talk a little bit about how we did this list. So that list was net income. So what happens is these stocks also have a thing called AOCI. So that list is a little different now if we take into account AOCI, which is accumulated other comprehensive income. These are types of income that don't show up on net income statement, but they do still show up in terms of assets. And so here, we're going to do a sort. And you're going to see the list is a little different. So you have Microsoft, Alphabet, and Apple. So those are tech. So I think what I want to do is I want to color code these for you. So by the way, the S&P 500 has fallen dramatically today. It continues to fall into the afternoon. It's down almost 3%. You can see the heat map. Everything is in the S&P 500 is pretty much red. It's just a bad day, but I wouldn't let that bother you. It's just a bad day. What I would be thinking about is what stocks are making money, what companies are making money, because right now you're buying these profit dollars at a discount. So you have Apple, Microsoft, Google. This is tech, right? You also have AT&T, Meta, Verizon. So that's 6 of your top 25 are tech. Qualcomm, Broadcom, Intel, I guess Tesla you could consider tech. So those stocks right there, we're going to fill them, they're tech, blue. Okay, got that. Now we have energy companies, ExxonMobil, Chevron, Marathon, Occidental Petroleum, or OxyPeat, ConocoPhillips, Phillips 66, and those are energy. We're going to make those, God, I'd love to make them brown, but make them orange, energy. And we got biotech, Pfizer, Moderna, United Healthcare, Merck, AppV. Those are biotech or healthcare. Financial services, JP Morgan, Visa, Goldman Sachs, MasterCard is now you're getting a little bit down. So those are companies that make money. We're going to make those yellow. Finally, you got one retailer, which is Home Depot. And we'll leave that the way it is. So the reason I bring this up to you is these are the companies that are generating. So I know the top one is about 80 about $80 billion estimate. we add up the top 30 companies, the sum is 578. New note. Top 30 companies generate $578 billion in total income over the past year. That's a lot of money. $578 billion is a lot of money. Now, if we look at the average cash flow of those companies, right, what's the average cash? And I know that Apple, by the way, is about 150%. Just know that. We have an issue where the data provider gave us a bit of an oddball there. First, let's make sure I'm doing the equivalent, 578. So that is the top 30 companies. So if we look at the top 30 companies, how they doing with cash? The average is 173%. So they generate, on average, 173% cash flow from operations over net income. So they are very healthy. Okay, what's total market cap, Jeffrey? What am I paying for those top stocks? So I want to say this is like 2.7 trillion. Again, estimate. It's close enough for government, though. Again, I struggle because I want to make sure these are totally equivalent. So I'm going to go back, make sure I'm at my 378. And that is through, it's through Texas Instruments. Market cap. So what am I paying? I am paying $11.3 trillion. To earn $578 billion. So you'll notice that's roughly speaking 20 times earnings. That's a lot. And that's why it's red. Because you're paying a lot for earnings that may not be growing as we head into a recession. It doesn't mean that every company, though, is charging you 20 times earnings. So we're going to figure that out right now. Again, I've given you the list so you see it, but now I want to figure out what is the multiple of total capitalization, which is debt plus equity, over total income, which is net income and AOCI. So tell me, Jeffrey, what is that amount? Now, I don't really have it for Apple because that's a lot, but I know I have it here. So total cap is long-term debt plus market cap divided by net income plus AOCI. And I want just a straight number. So I'm paying 30 times earnings for Microsoft. So by the way, that's a lot. That's a lot. Paying 20 times earnings for Google, 14 and 12 for Chevron and Exxon, only 11 for AT&T, and you see 14 for Meta, 15 for Pfizer, 16 for Verizon. It goes up to 38 times earnings for JP Morgan, but only 6 times earnings for Marathon. 6 times earnings for Occidental Pete, 11 for Qualcomm. 25 for Goldman, 33 for Visa. It looks like your established companies with steady earnings, like United Healthcare, you got to pay 50 times earnings. AppV, 35 times earnings. But if you like oil and gas, you're paying 7, 13, 6, 6. You're not paying much. 12 and 14 for your earnings. And so, Jeff, am I really surprised, right? So take a look. And by the way, the S&P 500 is continuing to stabilize and fall. This is not a good market today if you're a short-term investor. However, if you're a long-term investor and you're looking to buy more, this is an excellent market because you're getting your discounts on. If we look over the year, you're still actually in this declining model, right? But you're not even as low as you were back in October. If you bought in September or October at 3,600, you're still up almost 200 points, which is about 6%. You're not even close to the bottom on the S&P 500. You're just getting a discount. So let's go back and take a look at the stocks and what they're trading at. And so we're going to review this list again, but we're going to maybe slightly tweak it. And we're going to look at this and we're going to say, all right, let's copy this down all the way. And now that I know the stocks that are giving me these tremendous discounts, right? And I don't really want to see negatives here because that tells me there's a loss somewhere. There's something unpredictable, right? And I'm just going to assert this was like 40, just to have a number in there. So I want to sort on this. I want to sort on who are the most expensive companies based on earnings. And you'll see a company called Team. Now, I had suggested to a client of mine that Team was overpriced about twice the price as it is now. And you see other stocks where you're paying 20,000 times earnings, 6,000 times earnings. That seems like a lot to pay. T-Mobile, you're paying 900 times earnings. Net income and AOCI at 272 million. But yet you're paying like 260 billion. So I don't know that I want to pay 900 times earnings. So I guess this is for another day. But wow, look at those. Look at how expensive ServiceNow is. 2,800 times earnings. By the way, that's really high. That's really high, okay? Just want you to know that. What I want to know is, are there any stocks that I can buy for earnings? 1 times, no. But for 2 times earnings, no, that's okay. You could buy U.S. Steel. You could buy U.S. Steel for 2 times earnings. 3 times earnings. 3 times earnings. Alpha Metallurgical Resources. That is metallurgical coal. That is coal used in coking for steel. Oh, look, steel company, steel coal. Arch Resources. Peabody. You're buying those at 3 times. 3 times income. That's unbelievable. Warrior Met Coal, I think, is also metallurgical coal. So that's right. Boise Cascade. That's interesting. Cleveland Cliffs. I don't know if you people are thinking about this the way I'm thinking about it. PDC Energy. Laredo. Calon. So some of your wildcatters, some of your oil and gas exploration companies, also trading at a tremendous discount because their earnings are so high right now. Who knows if they're going to last? Nucor. Ryerson. You guys know Ryerson Steel. So the steel industry is trading at the high end, Nucor, 5 times earnings. And if they happen to eat Northern Oil and Gas, if these guys happen to, Timken Steel, if these guys happen to take their earnings and pay down their debt, it's going to be a beautiful day. So now there's really 2 things to talk about. Number 1, who are the most valuable stocks, valuable companies in terms of the earnings? We talked about those. We can go back to those. The second is, who are the cheapest stocks on this one version of the truth? And it's Alpha Metallurgical Resources, which is coal and steel and oil. U.S. Steel, Laredo Petroleum. Coal, Arch, Peabody, Warrior Metallurgical Coal. Boise Cascade, I believe, is paper. Cleveland Cliffs, steel. And coking, coal for coking. Callon Petroleum, PDC Energy, which is oil and gas exploration, then Nucor and Ryerson. And then Northern Oil and Gas, Timken Steel, right? Basically, Steel Dynamics. There's another one. You're steel in the steel industry right now, no pun intended, at 5 times earnings. I think it's great. And by the way, I'm going to watch these stocks, right? If these stocks fell today, let's take a look. Maybe they did. I do happen to have a lot of these companies in a particular holding, in a particular portfolio in Yahoo Finance. All right. So U.S. Steel is down 5%. Cleveland Cliffs is up 8%. Steel Dynamics is down 4%. Nucor is down 3%. All right. All right. You're getting even more of a discount. Now, how am I doing with my coal companies? Arch. So Warrior Met, I don't track. I probably will start. Timken Steel, I don't track. But you look at the coal companies and they're at a discount. So you're basically buying these companies for nothing. For like anywhere from 2 to 5 times income, inclusive of all the debt and all the equity. Now, you got to have, what's the right term? You have to have a lot of confidence. Confidence in the U.S. economy. Confidence in your ability to hold. Confidence that if we have a recession, it won't bankrupt these companies. Because the steel industry tends to just wholly go bankrupt. And then you lose all your money. The coal industry probably wouldn't be far behind them. Because the coal industry, right? Some of them, well, the metallurgical coal goes to steel. The electric use coal goes to electricity. And if we have a major recession, they probably all go under. But for right now, you're getting them out of steel. If the economy stays strong, you're in good shape. So that's so interesting that you can find this in like minutes looking at these charts. So not to say, you should pay for this data, but you might want to in the future. It's good data. I like this data. Again, who are the big players? Profit. I can't believe it, but Apple, Microsoft, and Alphabet are the number 1, 2, and 3 profitable companies in the United States in terms of U.S. listed stocks. Exxon and Chevron, number 4 and 5. I can't believe it. I can't believe that AT&T and Verizon, 6 and 9. Meta, Facebook. I don't even use Facebook except for like an occasional video tweet. It's very high. Pfizer. Then you look at JP Morgan Chase. Wow. Home Depot. I didn't know Home Depot did so well, right? Marathon Petroleum, Qualcomm. I guess the graphics cards. Occidental Pete is up there. Visa, ConocoPhillips. Maybe we should have bought all those oil and gas companies when we had a chance, because now they got tons of profit. Goldman Sachs. Smartest guys in the room, maybe. Broadcom. Moderna. Intel makes a ton of profit. Intel is a stock that if I told you to buy Intel, you would laugh at me. You would say, Jeff, it's a washed up company. Well, maybe they are a washed up company. But let's take a look at them over 5 years. That's pretty washed up, actually. It trades at 47. Looks like you got a floor at 47 for, let's go to 50. Get rid of that. I'm going to do a quick look at Intel. I got a line, make it fat. 50 bucks, 40 bucks. Okay, so it's really traded above 50 a lot. And it's really only now come down 30 bucks. We're at 25.58. So this thing is down like 50% since March. It's down 50%, but yet Intel has a market cap still of $110 billion, 111. Cash flow of 13.6. So that is it's about 8 or 9 times cash. Long-term debt's $37 billion. That's not anything to sneeze at. I got to pay that back. But $13 billion in net income. Intel is not going anywhere. It's worth $100 billion in equity on the books. Yeah, that's pretty. That's a pretty chart. That's a buy low kind of a chart. So okay. It's down 5% today, so Intel, pretty good value stock when you look at it. Down 50%. It's got solid earnings, solid cash. I'm loving that stock. I don't even know what to do with this, right? So another way to screen these is to say, let's see how much equity they have on the books. So let's look at common equity divided by total capitalization. So it's equity divided by debt plus equity. And for all those who will tell me that we divide before we add, let's add it back. So we'll start with Microsoft. So total equity, common equity divided by market cap plus debt. Gives you still a number. So you're basically getting 9% of your purchase price as equity. 9 cents on the dollar. You kind of have to believe to spend $1 for 9 cents of assets. I'm not sure I believe. Not with that kind of number. So what else do we have? Maybe there's other companies that have a lot of assets and you're getting a discount on assets. My guess is the really profitable ones, maybe not. But okay, ExxonMobil, you get 38 cents of assets for every dollar invested. Chevron, 44. AT&T, 47. Verizon, only 30. Home Depot, you don't really get any assets. You get 0% assets. Less than 1%. Marathon, 32. So as I go, though, Intel, you get 68 cents of assets for every dollar invested. That's great. My guess is if I were to run this and I would add a rule, I want to add a rule. I want to say anything in this one that's greater than 0.5, I want to do a green. Let's see. There it is. So Intel looks good. Micron Technology, which just fell because they had some rough revenue in this quarter, stealing it. Look at that. Oracle and Lowe's, you have negative assets. That's not good. D.R. Horton, Lennar Group. So a lot of these I haven't heard of, but look at that. U.S. Steel, you're getting a full dollar of assets for every dollar you invest. I got to tell you, this is starting to look better and better, right? This is amazing. Look at that. So, Genworth Financial. So some of these are financial companies, and so it's hard because the assets may not be copacetic. They may not be reliable. A lot of these I don't know, like Genco Shipping, I don't know. G3 Apparel Company, I think is Tommy Hilfiger. Mohawk Industries, I used to know who that was. There's U.S. Steel. Telephone and Data Systems, TDS. You're getting $1 for every dollar you invest. Lending Club Corp. Not doing so well lately. You're paying 4 times income because the mortgage market's down, but well capitalized. And so now you're looking at stocks with a different way, a different viewpoint. Timken Steel, you get 90 cents on the dollar. Certain banks trading at about 1.2 to 1. That's not bad. So when I look at this though, I start to change my mindset, right? Because now here's the value companies: Lending Corp, Telephone and Data Systems, EBIX, and again, U.S. Steel Corporation. So I'm going to sign off now. I want to thank you for watching. Hopefully you learned something from profitable companies and all that. So thank you very much. You take care now.